Is an ongoing advisor relationship mandatory or beneficial? Let's talk about some of those aspects. So financial planning, there's a few parts of the process. Typically, when you first engage a financial advisor, they'll put together a plan for you, a strategy, a statement of advice, where you are today, where you're going, what things you need to implement to do that. Usually that's a one-off cost, might cover a few weeks or months worth of work, and then it's all done. For some people, that's all they need, but for most, it's then beneficial to have an ongoing relationship. Maybe not forever, but for at least a period of time. So why and where is that beneficial or relevant? There's often a few parts of that process. And that's, I suppose, around in your situation, your strategy actually might take a few years to implement. It might be that you're 4 years away from retirement and we want to do these things each year until those 4 years plan out. It might be that you've got a large amount of money that we can't move all into super straight away. We'll do so much this year, so much next year, so much the year after. We may be selling assets or buying assets, selling shares, selling a rental property for capital gains tax. We want to spread that over a few years. And therefore it's important that you've got that relationship with the advisor to help you through that period of time, because your circumstances might change, what you're expecting to sell that for might change, and as best as we do in that original document, the numbers are going to change. That original document, I suppose, a bit like mapping out that plan. Often think about it is putting that destination where you're going to drive to. I'm going to drive here, put into Google Maps, it's going to take me 8 hours to get there. But along the way, Google Maps will update that. If there's been an accident, if I have to stop and get fuel, it'll calculate how much further to drive, all that kind of stuff along the way. That ongoing financial advice relationship is a little bit like that. That statement of advice is the initial plan, but things will change along the way. It might be, as I mentioned, your own circumstances. It also might be government regulations. There are strategies that we can do for clients today that we couldn't do 3 years ago because the government, the rules have changed to allow older people to put more money into super. So it's important that someone has an ongoing relationship to know that's now on the table. They otherwise may not have known that. It may be that the contribution caps change because they do change every few years. So for a lot of years, you could only put 25 grand into super. Then it was 27,500. Now it's 30,000 a year into super. So if someone had that old plan based upon 25,000 a year, they'd be missing out on some extra contribution caps along the way. So that's some of the tangible reasons and benefit of that ongoing relationship. From a legal and compliance perspective, financial planning is regulated. It's important that it's regulated for various reasons. But what that means for us as financial advisors is if we give someone a plan and they don't have an ongoing relationship, if they give us a call 8 months later and say, oh, by the way, I've sold these shares, can I still put this much money into super? We actually can't give that advice. That might sound odd, but we can't give that advice because we don't know what other circumstances may or may not have changed in your life. That ongoing relationship allows us to keep things updated. We'll keep an eye on your super, we'll keep an eye on investments, we'll speak to your accountant or do your tax for you to know that things are on track. Therefore, with an ongoing relationship, you pick up the phone and call us, we can answer that question for you. Financial advice, if you don't have an ongoing relationship, usually it's go back to the start. We have to do a whole new statement of advice for you with a significant cost. So that ongoing monthly cost can be a lot cheaper, a lot more beneficial for you in the long run than redoing statement of advice documents along the way. Perhaps regulation may change in the future, but it's been that way for a while. And if anything, it's only got harder for financial advisors to give that advice. So that ongoing relationship is important as well. The good thing is, in most cases, that ongoing advice is tax deductible. We can claim that back on tax, potentially in your personal name or your super fund's name, depending where it's paid from, but ongoing fee is often tax deductible. So there's a nice benefit with that along the way as well. Another few things are, and often these things clients say to us, is that it's a relationship. They like to know that they can pick up the phone, they've got someone who knows their financial situation the other end of the line. It's beyond a call center. They're not just calling a phone number to get some information. We know about their circumstances and their whole financial world. And they're not having to wait on hold to speak to someone who doesn't know what's happening in their life. We were across that situation. And importantly, stopping them from making those silly mistakes. This financial world can be complicated, and often that value of that 2-minute phone call, hey, I'm just about to go in the bank, whose name should this account go in, mine or my partner's? Those kind of quick little decisions that might seem not that important often can save hundreds, if not thousands of dollars, either in tax or investment returns. So all that stuff adds up over time. And that's the value of that ongoing relationship. The way that we like to work is it's only ever going to be a 12-month commitment, but it's renewed every year. So what I mean by that is that usually, and it should be a 5 or a 10-year relationship, but you're not locked into that. We often even don't like to lock you into any products that can or can't be changed. So it's important if we're not adding value in that relationship, that can be changed or adapted. But generally, most clients that work with us continue to work with us year in, year out. And importantly, don't just take our word for it. There's a research body out there called Russell Investments. Every year they do an analysis of the value of a relationship with an advisor. And they've got a formula to calculate how and where an advisor adds value to a relationship with a client. And they've got 5 key areas that they feel that advisors add relationship in. Those 5 key areas are: 1, asset allocation. Making sure your investments are set up the right way for you. Are we high growth? Are we growth? Are we balanced? What's the right exposure for you? And if and when should that be changed? There's a lot of returns to generate for you, making sure you've got the right asset allocation. The second one, behavioural coaching or behavioural relationship. Making sure that we don't make those silly mistakes at the wrong time. Things can be scary when the markets go down. We've seen the GFC. There'll be events like that in the future. The people who lose money in their relationships are the ones that don't know what to do. Having an advisor that you can come and meet, pick up the phone to, send that scary email to saying, what should we do at this point in time, often saves people from making really silly decisions at the wrong time in the cycle. There's value in that relationship and making sure that we can help you make those right decisions. The third element they call is choice, or we kind of call scenarios. Being able to sit down with an advisor and take you through scenarios. We do that all the time. We're downsizing our house. What happens if we buy one for this price or that price? We'll have more money to put into super. Can we live off more? What happens if we retire earlier? What happens if we want to give the kids some money earlier? We love running those numbers and scenarios for you to give you that peace of mind that your retirement's on the right path, making sure things are lined up the right way. Again, there's value in that peace of mind knowing that we can downsize, or we can still spend this much money, or we can still have those overseas trips, and we're still going to be fine in the long run. That's the third element of that relationship. The fourth element they refer to as expertise. Having an advisor who knows the rules, knows the ins and outs, to making sure you're getting the right benefits along the way. Whether that's saving on tax, whether it's settling entitlements, because we're retirement specialists, that's all we do, we know those ins and outs. We're going to make sure that your situation is fully maximised in every part of that relationship. The fifth and last element, the exciting bit, is tax. Making sure we're paying tax, we're paying the right amount of tax. Whether that's personal tax save, whether it's minimising capital gains, whether it's tax within super, or even reducing tax to the next generation. There's a fair bit of tax planning we do as financial planners, and many in the office have an accounting tax background to make sure we're maximising that for you. That's the fifth pillar of the value and ongoing relationship as prepared by Russell. Russell do this report every year. In the most recent report, they quantified this, and they calculate that an advisor relationship adds 5.9% a year to someone's overall wealth. That's pretty significant. An extra 5.9% than perhaps if they were doing it themselves without any knowledge. Now, some people might be able to get some of that benefit themselves. They'll know bits and pieces. They'll listen to a podcast. They'll watch some videos. We like sharing information, but working with an advisor, making sure we're maximising all parts of those pillars along the way. Ongoing advice does cost money. We operate a business. We need to make sure we keep our doors open for many years, but usually our fees are substantially less than that 5.9. Usually for most of our clients, they're well less than 1%. So what that means is there's a lot of value back in your pocket. Yes, it might cost money to work with us every year, but we would be offering that to you on the basis that we know we can often add tangible benefits much greater than the fees that it costs for us to operate. And more importantly, the intangible benefits. A lot of the clients who work with us for a long period of time get that benefit of knowing that I've got that peace of mind, I've got an expert on my corner. If I can pick up the phone and they'll know what's happening in my life. If I'm not here, my kids know that somebody knows my whole financial world. That's the value of ongoing advice. We're offering that to you. We're very confident we can add value along the way.